welcome everyone to the community call 6. It's our first governance call of 2026, and it's a pretty important one in terms of setting the direction for the months ahead as well. As always, quick reminder, as always, this is a community call, and the main body of driving the decisions here is the Lazy Summer DAO, and this call serves as a catch up on what's been happening, what's been ongoing, and discuss those topics. So today's call is structured around three, I would say, big themes: where governance stands heading into mid-January. One second, I feel like I'm hitting sounds. All right. So where governance stands heading into the January, how yield sources and the risk caps are evolving. Once Jordan joins us, we'll hear more on that. Whether the DAO is aligned on moving forward with the DAO-Managed Vaults as a separate product line. Maybe to kick it off, I would like to do like a brief December retrospective. I won't be rereading the entire December recap. Everyone can find that one on the forum .sumr.fi, but it's worth grounding ourselves in what December actually represented. It was a month that really wasn't about the growth experiments or like flashy launches. It was about incident response, user protection in regards to the Arbitrum USDC vault, governance infrastructure upgrades, governance V2, preparing the DAO for the next phase of SUMR as an asset. We ended the year with a slight TVL growth despite holidays, which is great. A stronger treasury position, governance V2 live and actively used, and most importantly, clearer framework around the risk, incentives, and accountability. One thing I do want to explicitly call out is that governance V2 is alive, and with it, the ability to lock SUMR in governance V2. This isn't, staking in like the traditional DeFi sense. There is no protocol promise of yield for passivity. So locking SUMR is about long-term alignment, about governance participation, and where applicable eligibility for governance-directed distributions approved by the DAO goal. That distinction matters, especially as we are moving towards SUMR transferability. To catch you up on what's live on Tele, our governance on-chain voting platform right now, there are actually a few open votes. So there is a SIP 556, which is about December referral campaign payouts, or as we like to call it, the Beach Club. The SIP 512, which is discussing and proposing 5 million SUMR tokens budget for media partner compensation. I believe Jordan has already created an update post there as well. So read up more on what's the progress on the media partner, on the media partners and their activities. SIP 515, funding aerodrome ignition incentives, very important one. Governance V2 USDC payout for December 2025. So as I mentioned before, the staking and the governance V2 has been launched. So now the payouts of the USDC, the first sort of revenue share from the protocol, can be distributed. So that's the SIP 313. And last but not least, we have a SIP 311.3, which is a delegate rewards for December. So if you are a delegate or a locked SUMR holder, these are the votes shaping January's execution. Next up, we have a couple of RFCs in active discussions. So right now, from my observations, what we are actively discussing is Arbitrum USDC user reimbursement. This is in regards to the old vault that had the exposure to the silo finance. Adoption of the SEAL White Hat Safe Harbor Agreement. funding an Iraqis liquidity vault on Base, potentially launching DAO-managed or indexed vaults. And these are not theoretical. Most of these are sort of quite well in the process, and looking forward how they will shape the protocol going forward. What's coming next on the January's roadmap is Guardian module, RFC. I think this is very important upgrade that we'll bring up. ETH Plus, which is one of the strategies that has been proposed. I think after Block Analitica has provided their input, will be ready to be moved into an SIP. The same goes for Midas and Apollo for the higher risk USDC vault on mainnet, and Kelp HG ETH. I think furthering the discussion there, as some of the core team members have commented on the proposal for the higher risk ETH mainnet. I believe there are moves on the Hyper EVM deployment and the first vault over there. I think that's also super exciting. Seal, as I mentioned before, Seal Safe Harbor. I've been discussing with the Dixon, and most likely we'll move into an SIP form, so we can then push it towards the on-chain execution. Fluid Key and DGen 1 airdrops is also an RFC that has been posted some time ago, and with the SUMR become transferable, I think it's the right time to promote it into an SIP. There is also a token readiness working group or transferability readiness working group rewards distribution. I believe with the finalization of the transferability on the 21st and 1 week sort of leading up to it, the vote being proposed, we'll be ready to distribute the rewards for all the involved delegates there in the process. Arbitrum reimbursement execution potentially as well, and the main event, SUMR token transferability, currently targeted around January 21st, alongside the Aerodrome ignition launch. And I would say that's the governance backbone for the month. It's quite a lot of moves. I'm not sure if Jordan has joined us yet. I think he did. Maybe we can bring it to the new yield sources and the Block Analitica cap update. So maybe just to set up the context, I think it would be nice to talk yields and caps. One thing I want to be very clear on, Block Analitica created vaults still seems to remain conservative by design. Potentially what is changing is the diversity of yield sources, how caps evolve as protocols mature, and how we separate safe by default vaults from maybe more experimental DAO risk-created vaults and connected initiatives. Jordan, could you walk us through what new yield sources are being considered and how Block Analitica thinks about cap increases right now?
Yeah, so maybe it makes sense to share the blog. 1 second, let me share my screen. Right. So for those who maybe haven't seen, there's a blog that went out fairly recently around new yield sources, and I think that this will be not only new but yield source update around different caps that have been raised recently. So if you don't know, recently a couple months ago, actually. So somewhat recently, but not super recently. Block Analitica took a relatively large sort of risk-off posture, mainly because of mainly because of um, the wider risks within DeFi, specifically due to the stream incident, and they basically thought that there was a significant chance of broader contagion within the DeFi ecosystem. So they basically decided to say, hey, we want to just not be exposed to any of those risks, and they reduced caps to 0 across many, 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 many different yield sources, which basically meant that users had exposure to, only the most blue chip of protocols within the or yield sources within the lazy summer protocol. So, um, some people might, and some I think people might, look at those yield sources that they're getting exposure to and say, you know, well, I could do this myself, for example, even today within ETH, lower risk and higher risk, even for that matter. Um, you know, uh, there's let me just share and sort of show what I'm talking about. Uh, there is exposure to things that majorly exposure to protocols that users could kind of do themselves. If you look, almost 100% fluid light and compound v3 versus when you look at the distribution of yield sources that there's potential for, there's quite a few. um, and but yields have really compressed across DeFi as well. So does it really make sense to take all of this different risk? Probably not. Even across a lot of other really high quality protocols and yield sources. Um, but today, or I guess a few days ago, caps are starting to increase across different yield vaults, basically. Um, and that's pretty good. I think we want to be really transparent about that, and we really want to show why that's happening. Well, the protocol wants to show why that's happening. So yeah, maybe that will happen on the UI sooner or later, but for now, it's just these updates that are really transparent about that, and showing how yield sources are gradually increasing. And I think that's really great for users because it shows sort of value proposition in a way where instead of you manually having to go and raise caps from, or withdraw from one yield source and deposit into another yield source, etc. It's all done for you. You can just do less, which I think is the nice little key line with respect to lazy summer vaults. So what caps specifically have been raised, I think it's really good to take a look at that, is within base base USDC, several caps have been raised. You'll notice that all of these are with respect to stable coins, because there has been more dispersion across yield sources for stable coins more recently. So you see Morpho USDC, Moonwell has an increased cap. Morpho USDC Gauntlet has an increased cap. Morpho USDC Steakhouse. And then when it comes to mainnet, we have some raised caps across, Morpho USDC KPK Prime, Morpho USDC Gauntlet, Morpho Steakhouse, and Morpho Vault Bridge. And then lastly, we have a raised cap on USDT stakehouse. So these are really, I think, these are really incredible underlying yield sources. It speaks volumes to these curators, actually, and these specific yield sources, that these are basically, I'd say, one step outside of blue chip um, yield sources, which really speaks volume to these underlying yield sources. And I also think speaks volume to the lazy SUMR protocol and these vaults, because, as a user, how would you know what are the safest things to allocate to as risk is gradually getting a little bit more palpable to take risk across DeFi. So I think that's really great, and I think risk caps will gradually start to increase across the board. And this is something that I think will be, more transparent, both in terms of communication, but also in terms of on the UI pretty soon. So that's great. Also, here is different yield sources that are coming to the protocol in general, but I think maybe Jensei already discussed that. But yeah, maybe briefly, we have a couple of interesting ones coming to the protocol. One I'll highlight is Apollo. I think this one is really interesting, mainly because Midas has been getting a lot of attention, especially across these different dashboards and things like that. And they're not all Midas vaults are created equal. So again, the beauty with sort of lazy SUMR is that one of these Midas vaults, I think MEV Midas, which is a slightly higher yield than Apollo, was rejected because of specific risk criteria were not met, but Apollo was accepted. So yeah, really just shows the benefit of the lazy SUMR protocol once again, because how would you be able to distinguish that risk on your own? You'd be kind of guessing. At least speaking for myself, I know I would be. And lastly, which yield sources are next? I'm not going to go through this, in depth, because it would take a bunch of time. But I think one thing to rest assured is that, people like myself, other people are constantly scanning, yields.fyi or vaults.fyi, things like that, to see what the best yields are. And generally speaking, it's very reassuring, I think, even though you might, you see lazy SUMR in the top with respect to ETH, and less so actually with respect to USDC, but bringing it full circle, it's pretty clear why that is when you actually go through each one of these yield sources themselves. And generally speaking, yield sources really fall into kind of three categories. First is it's just too risky. So if you look at USDC and the list there are a bunch of yields that are relatively high, but when you actually go one by one, you'll see that many of those yield sources have been proposed within the lazy SUMR protocol, and they've simply been rejected because the risks are simply too high. So that's very, very fascinating in my opinion, actually. The second category they fall into is that they're coming. So, for example, the Midas vaults are relatively high on here. You can see Midas Apollo is number 1, 2, 3, 4, 5, and that'll be coming to the lazy SUMR protocol in just a few days. So that's really great. So you just got to wait a little bit, and then the last category is that the caps are simply set to 0, which means that the risks are too high to be allocating to those specific yield sources within the lazy SUMR protocol. So over time, users will get access to those yield sources when it is deemed a little bit more safe. So yeah, I think that's, to me, that's quite encouraging. But you don't have to take my word for it, of course. As many of you know who are on this community call, you can request a new yield source anytime. So just simply, submit an RFC, um, engage with the community, wait for Block Analitica to give some feedback, and it'll either go in the protocol or it won't. So yeah, that's the lazy summer promise. Ultimately, across all of these different things, above benchmark yield, embedded risk management, risk curation, and ultimately no yield chasing. And hopefully we can get back to a posture where we see these yields and this distribution once again. That would be absolutely beautiful. This is, yeah, to me, this is the real, well, the real value of the protocol. That is true, but also, it's also valuable that the risk can take a risk off stance. It doesn't feel as good to get these high yields from all these different yield sources, or to not get these high yields from all these different yield sources, but it's better safe than sorry. There are a few different yield sources that have significantly negative APY at the moment, or have because of the risk that they took. So that's better than being distributed in those yield sources that are too risky. Very lastly, I've been a bit long-winded here, but very lastly is January 21st is coming quickly upon us, and that's a big date. That's when summer TGE will finally happen. It's been a long road, but it's really looking like it'll be great. Um, and yeah, that's gonna be an interesting time for sure. I mean, it's been, as I said, a long road, and it's finally gonna happen in a few weeks. So hope everybody's prepared. So yeah.
That's great. Thank you so much, Jordan. Um, maybe to continue on this topic. There's been a proposal which I believe you have quite a good overview of around uh, DAO risk managed vaults and the rough consensus around this. It seems like it's one of the more important philosophical topics as well, lately on the forum. And it's important to remember that these like DAO risk managed vaults are not a replacement for Block Analitica curated vaults. They are more so like explicitly governance led. They are explicitly opt-in and explicitly allowed to take on different risks, liquidity, or composability profiles. Would you mind maybe from a like looking maybe just walking us through this like risk framework standpoint uh, and how potentially could this separation help Block Analytica do their job?
The question is for me, or?
Yeah. If you don't mind answering, I'm gonna post the forum post in the chat.
Sure. With respect to DAO-Managed Vaults, or indexed vaults, or I don't know what the
Yes. Yeah,
I
that's correct. Sorry if I wasn't too clear. Like sort of the separation between the BA vaults, which are a bit more conservative, predictable, safety first, and now this newly sort of proposed idea of the DAO risk managed vaults, which could be more experimental, indexed, governance driven, with different
Yeah,
expectations, different disclosures, accountability, and so on.
sure. So I have pretty strong views about it, I would say. You know, if I just share my screen here very briefly, um, you know, it's tricky. I mean, um, by the look, at the very nature of DeFi and all that, like, these are the yields at the moment. yields across DeFi have compressed. Fine. That is true. But there's still risk to be taken, and if you want to take that risk, you have to go seek it out yourself at the moment. So even at these underlying protocols, there's still a bunch of there are very large opportunities here. Gearbox, Morpho Edge, Ultra Yield. At the same time, they're a large risk. USDC Avant-Garde. Not sure that this is fully accurate, but maybe it is. But if it is very accurate, you obviously don't want exposure to that. So there are a lot of opportunities across these underlying yield sources, but Block Analitica is making an explicit decision to keep users' capital safe, basically. So these are super high risk or high quality, really blue chip protocols. Sky, USDC, Fluid, USDC, Sky, yeah, Sky as well. And yeah, from a user perspective, but this is also the higher risk vault. So it's a little bit contradictory in my personal opinion. So there needs to be, in my opinion, a way to access the markets, yield sources, in a more risk-seeking way when you want to do that, when you personally feel comfortable with doing that, because I think any risk manager worth their salt is going to necessarily be a little bit behind the curve, so to speak, when it comes to taking risk. They're going to be steady Eddie, slow and steady wins the race, I think. Whereas if you want to be a little bit more aggressive, then you'd have to do it yourself, especially now. Anyway, I'm being really long-winded just to say, I think it's a very important step, and I think it gives more autonomy to users to say, hey, I'm ready to take exposure. I want to get broad exposure to underlying yield sources, not in a degen way, but in a more sort of balanced way. And especially with things like switch within the lazy SUMR protocol. So let me just show you here. Being able to switch in one transaction between different yield sources or vaults. I mean, for me, it's kind of a no-brainer to have these more risk-seeking vaults and being able to move between them and have the best of both worlds. But that's my opinion. I don't know what other people think. So I'm not sure if that answered the question. I'm just kind of a little bit.
Oh yeah. I think it definitely did. Thanks so much for sharing. I know that Chris has been proposing this, but I believe you had quite a good outlook on this proposal as well. I don't think Chris has joined us today on the call, but yeah, if you have any thoughts about this, of course, we're going to have a Q&A at the end where we can discuss this and other topics, but also please do drop into the forum and check out the launch of DAO-Managed Indexed Vaults proposal. To me, it seems like it could, prevent some of the pressure that kind of like we create to stretch more of a conservative mandate that the Block Analitica is fond of, which is very important, and I think they're doing a great job. But if there would be more of an appetite for more risk-on strategies, then I think something like DAO risk managed vaults or indexed vaults could be a product to explore. So definitely exciting from my side. Maybe I would like to touch up on the LP program a bit, on the treasury usage, the Iraqis rationale, as I was the one proposing the following proposal, just pasting it into the chat. So because I think this ties to get a treasury usage and the LP incentives and the long-term token health, I feel like this is more of a proposal to focusing on the sustainable liquidity, reducing volatility after the token transferability event, and the protocol owned liquidity that doesn't disappear when incentive stops. This is not like sort of to say that this could be or is the only option out there, and I think it's great to see many delegates already chiming in on that topic. Um, I have also invited Ericus and some of the members from there to join the call. I'm not sure if they did. Um, Maybe if they did, they can just raise up a hand and join the conversation here. But maybe just to briefly go through it. In terms of this specific proposal, the structure is kind of like staged into two phases, where the first phase is the aerodrome ignition from the day one, where it's focused on pure price discovery, the community participation, and incentivized distribution. Where the phase two is the Iraqis vault, to serve more as a stability layer, a way for for any traders and token holders to arbitrage between the two different pools. To also make use of the algorithmic liquidity management and not to rely on constant emissions, which are sort of temporary on the aerodrome ignition side. This proposal I've also structured to be sort of split between the Lazy Summer DAO treasury and the role of the foundation that could be played there to make it more efficient. So in the proposal, I outlined that the DAO would authorize around $100,000 in USDC and a summer amount, which at the moment is variable because we haven't really been through the price discovery there. So these assets would temporarily move to the Lazy Summer Foundation purely for execution timing. The governance time locks that the Lazy Summer protocol is using and the ones that the DAO is in control of, they are not really designed for an hour by hour launch coordination. So this is basically the proposal there to us foundation for such executions. Maybe just to address from my own personal perspective some of the forum feedback. Like there has been a sort of a question of why not just the aerodrome pools. I think incentivized liquidity is fragile, and Arrakis is designed for persistence. It is also there was a question around why base, and of course this is up for discussion. It could be Base, it could be Mainnet, it could be any of the protocols that Arrakis, any of the networks that Arrakis is integrated into. But why Base is very simple, in my opinion. The Lazy Summer protocol has been deployed to Base as the sort of the home, if we can call it that, network. Whereas Mainnet, Arbitrum, and Sonic are more of satellite chains there. So Base basically lower gas, more capital efficient, and also aligned when it comes to the deployment strategy of the token, since the aerodrome ignition campaign will be launched on the Base. So there was a question about who would be monitoring this, and this is, I think, very important question. So I think this is partially, of course, DAO delegates, but also an Arrakis dashboard and their automated adjustments. So it's not to be perceived as a black box, and this will be a very open process there. Again, if anyone here feels strongly, I believe Arrakis has commented on the forum on some of the questions. For example, I can see Brian has posed some questions there. So I think it's important to surface any of these thoughts and or propose other ways of how we could make the summer launch even more sort of even deeper liquidity, sort of even more structured to be able to withstand the initial sort of volatility on the market. Yeah. Maybe I would like to bring here Joe and invite him to speak. There has been quite some discussions on the Discord server and also some questions on the forum around the SUMR token and vesting and individual vesting sort of tokens and the distribution of thereof. So I would like to hand it to Joe to walk us through a SUMR vesting spreadsheet that he has prepared, which is great to see. This will be also then later on shared with the community. The goal here is very simple. It's transparency. What's locked, what is unlocked, how governance V2 interacts with that over time. Yeah, so Joe, please take it away, and thanks so much for joining.
Yeah, thanks, and hi everybody. So yeah, as Jens said, well, maybe just a bit further background on this. So as you are all aware, we are launching via the aerodrome ignition mechanism, and as part of that process, we've been over the last week or so going through the process of preparing a fairly comprehensive disclosure document that will be made public fairly soon. We're just finalizing that with the aerodrome team, and one of the key components of that is what you would expect, which is the I guess the vesting and the unlock and the tokenomics modeling and the analysis, let's say, you know, to make that information available to the community and everybody who's interested in that. So this document will become was due to become available shortly via that process, but given that this is finalized already, we thought it would be a good idea to present it on this call and give you guys early visibility. So this, let me just share my screen actually, so you can see what I'm referring to. So essentially, yeah, this is supplementary information. You may actually, if I just flick to this tab, you may have noted the blog post that Jordan put out, or we put out. Jordan published it I think a week or so ago, which is a detailed breakdown in blog format of the SUMR tokenomics. And halfway down this blog post, there's a whole section that is essentially reflecting the same information that I'm about to talk through from here. It's token supply and distribution. So this is the other reference point for this. And again, a more detailed and equivalent analysis will be contained in that aerodrome disclosure document that I just mentioned. But this spreadsheet is effectively representing the same information, just in perhaps an easier to understand format in a sheet. So I won't go through every single line by line. This will be shared and you can pick through it in your own time. But just to give you a kind of introduction and a whistle-stop tour, we have up here is the summary, key information. I think everybody should probably be aware of most of this already. Token supply, token ticker name. This is actually something that's worth mentioning. So we are referring to here in this document to both the token generation event date and also the token transferability event date. I think in the marketing materials and when Jordan speaks, we are generally referring to the TGE as the event happening in 2 weeks' time. But because a lot of the vesting and so on is calculated with reference to the actual when the token was created at the beginning of 2025, those are 2 different dates, and they are explicitly defined in this document for that reason. Oh, sorry, yes. Let me zoom in. Sorry, I've got a big screen, so that's probably a bit small for you guys. Is that better? Okay, I'll carry on. If you need me to zoom further, let me know. So yeah, the summary section there. Then, so again, as already disclosed, all the way back a year ago when we first put together the project white or light paper, and then various blog posts and communications since, we've referred to these 4 categories of token that exist. There's the community, key stakeholders, contributors, and the foundation. In this category overview section, that core contributor block is broken out into 3 subsections because there are different vesting and unlock terms associated with those 3. But broadly, this all adds up to the billion tokens. So this is the headline categories that we think about and that are modeled in the below. that you should already be familiar with, and again referred to in the blog post that I just pointed out, with the headline details about how many tokens were in the original allocation, how many have emitted to the end of 2025, and then also the 31st of January, with obviously the TTE date sitting in between those 2 dates. This is all calculated on a calendar month basis. So the TTE is sat between these 2 dates. It allows you to have a sense of what that circulating supply will look like at that date. Importantly, on the core contributor A category, so this row here, there are both time-based and milestone-based vesting conditions. There's plenty of detail about that in the blog post again, but here is a high-level summary of what those milestones are, so that you have the context for the unlocks or the vesting on that element, because it's not certain. There are criteria that need to be met. Milestone-based vesting means that there's some uncertainty about when those things happen, if they ever happen. So that's important to understand. And then below this section here is I guess this is the analysis. This contains both the historical actuals down to, so just to give you a bit of some more context as to what this means. We've got these are monthly periods. This is the TGE date that I referred to, and then this is TGE plus 1, 2, 3 off into the future. So as of right now, we have just passed the 28th of December, which is the 11th period after the TGE date. So we're in this block right now where the TTE is. So all of this information above here is actual, that's what actually happened, and then we have to make assumptions about the future. So some of these tokens will release and vest in line with predetermined time-based vesting criteria, which are certain. And as I've mentioned, there are other emission categories where we don't know exactly what will happen, so we've had to make some assumptions. And of course, anybody that wants to can make a copy of this document, make their own assumptions, and do their own analysis on this. But this is these are our assumptions across these various categories. So yeah, and then this is just broken out across the 4 categories, and again, subcategories for the 3rd category, to put together the month to month and then cumulative emitted total over the next 4 years, or 3 years from here, 4 years from the beginning of the vesting timeline. And all of that said, this is a hopefully easy to digest chart that plots all of that out. One thing that some of you keen-eyed people might have noted is that doesn't actually get us to $1 billion at the end of the 4 years. That's intentional, or that's explainable, let's say, because as I mentioned, there are some criteria associated with the emission and the vesting of some of the tokens in here that we just don't know when that's going to happen. And we've, in some cases, assumed that those milestones are not met within this 4-year window. Therefore, there are some unemitted tokens at the end of this analysis period. So that's the balancing number there at the bottom. But yeah. So yeah, happy to answer any questions either now or on the forum. We'll make this, as I've said, document public. You can all dig through it, and yeah, hopefully this answers a lot of the questions that we've seen coming in from the various communities, both ours and the Aerodrome Discord and so on. So yeah, I'll leave it there. If there's any questions, shout. Otherwise, back over to you, Jensei.
Thank you so much for this. This has been great. Yeah, please, if anybody has any questions, I think we can open the floor for a bit for the questions regarding any of the topics that we are discussing up until this point. Seems like some of the important topics that we went through is like sort of are the delegates and the community comfortable with the DAO-Managed Vaults as a distinct product line? Maybe does the liquidity sequencing feels right? Like I think this is definitely something that we should sort of focus on the forum as well when it comes to Arrakis or any other options for yeah, for the supporting of the SUMR Aerodrome ignition launch as well. Any unresolved concerns, around the treasury deployment? Maybe is the governance V2 doing what we expected so far? I believe last time when I was asking the Dark Lord Holobricks, which I believe is joined the call as well, was how comfortable are we now with the governance v2 and sort of like going through with the foundation giving the full rights to the governance v2, which has not yet happened just yet. The reasoning there is, as been explained to me, is that we haven't properly tested the governance v2, and this is specifically like in production when it comes to a larger sort of a cross-chain proposal, because most of the proposals that, or all of the proposals sort of brought up lately on the governance v2 has been focused on the base. So I believe once we'll go through that and everything will work as expected, then we can move forward to a full admission of the governance v2 and a phase out of the v1. So if anybody, or if nobody has any questions, if anybody does, of course, feel free, raise your hand, come in, and let's have a chat. Otherwise, I would say we can wrap this up. I think January is all about execution and alignment, not really about the reinvention. We have been out with the protocol since, let's say, February last year. The DAO has been growing, and it really feels like we spent months building governance, infrastructure, trust, and the process. And I think this call was about using that foundation sort of responsibly as, you know, the SUMR token is entering its next phase. So with that, read the RFCs, vote on the SIPs, please. If you are a delegate, do not miss the latest proposals that are live on Telly. Please don't hesitate to challenge assumptions early. I think that's where, or that's what a good DAO governance should look like, and I believe it does look like that in the Lazy Summer DAO. But do not hesitate again to challenge assumptions early. And thanks everyone for joining. Let's catch up again next week on another call. And until then, stay lazy. Thank you so much, everyone.